Good morning. So another session. It's midweek. It is Wednesday, 6/3/2026. So I what I do usually, the first thing I do when I wake up, a couple hours before the market opens, I will update my levels. I'm gonna update the priced in expected move. So every session there is expected move priced in from options. I will also update my gamma, the gamma flip line, which is very important as to the sentiment of the market. Under gamma, you sell into selling, you buy into buying. Above gamma, buy the dip, sell the rip is the sentiment. It's always the same. There's a whole group of people called the gamma hedgers that only solely trade that sentiment. So, and they've been very profitable. Hedge funds use gamma. Gamma depends on price action, depends on price direction, depends on the inflow, outflow, and of course the current state of the economy and markets. That being said, once I update those levels, I'm gonna check which one has been hit. So the lower, for example, on NQ, lower weekly expected move has been hit a couple times this week. Like Friday closed within, Monday it did sweep the lows, Tuesday sweep the lows, and then it continued higher. So obviously we keep closing dailies in a bullish manner, and today we did almost hit the lower daily, and now the body of the current daily candle is above the previous top, which was 30,711. Uh, as far as right now, you can see NQ is stronger than ES. So now one of those, because they are in a divergence, one of those is the true trend. One of those is lagging behind, which therefore has the better opportunity. If they're equal, you kind of wait for a breakout. You wait for a lower high or a higher low that could lead into a lower low or a higher high. That's mainly the main part that I look for market open. There's always going to be manipulation. They cannot just ramp the price without some type of manipulation or sweep of liquidity. If you enter before the sweep, you are the liquidity. You have to wait for the sweep. Professional traders will wait for the sweep, see the sweep, and then enter. Like, for example, this beautiful day over here. What happened? The break of structure ramped the price up on a Wednesday, midweek. It reached a high, and then what happened after? There was a sweep. It had to sweep. It had to get some liquidity. So everybody that was not limited at the break of structure when it happened ended up being triggered on that sweep. Now you enter. And what happened? Breakout. A multi-day breakout. Same thing happened for ES. ES didn't really, it still did have the break of structure, but not as strong. And then it just consolidated inside bar the next day on that Wednesday here, while NQ was weaker than ES, and then it swept far below the break of structure into the same breakout. Because obviously, if NQ breaks up, ES is going to follow. That's it's the same market, so they both will follow each other. One of them will be weaker than the other, which will give you the better opportunity. In this case, NQ had the better, cleaner opportunity at the breakage structure. If you were limited here, you were absolutely, it was a pristine tap into a multi-day trend. Now, with that information, I know that they have retested the lower daily yesterday, and today is likely going towards that as well on ES. So ES is possibly going to retest the lower daily. So in my case, I have my limit at the lower daily waiting for a trigger. And my risk on the short would be this resistance here. Now, why here? Because if this is the first break of structure, that's the second break of structure. If this one breaks, if they close under this low, that means that the change of character or market structure break would be valid because it broke through to previous low. So now, if it does not break that low and it just retests somewhere over here, fetches all this liquidity here, and bounces, now I am in a winning trade. Of course, it's going to close above, probably retest, and then go. I would likely be in a winning trade, which therefore I could increase the size of my position once the retest is clean and clear with volume and buyers. So that's what I'm going to look for today and make sure that I'm protected at the lows. What I would aim for is point of control here, which would give me roughly 1.7 for roughly 23.5 points, 0.25 points. 20 points, not bad. Now that's a probe. Obviously, if I increase position, it's going to be up to 25 units. That would likely give me a pretty decent amount off of 25 points. I don't need more. I'm not looking for a holy grail. I'm not looking for an entire, complete uh, 50, 60, 70, 80, 100 points. I don't care about that. I'm not entering this shit on one unit, Like to me, I'm looking for a small scalp, a small amount that I can get in and get out as quick as possible before anything happens, before news, before somebody speaks, before pipeline blows up. I I I'm it's easier for me to just grab something small at a higher size and get out because I can afford the risk of the size that I'm playing. Now, if we do break point of control, obviously there will be the upper daily expected move priced in is 76.52. So now if we do break point of control, which we have attempted to break it multiple times, but it has rejected. So to me, that's a resistance. That's a strong resistance. They keep trying to sell it there. So there's a very, very high likelihood that we are going to break that support. And if we do break the support, because there was so many attempts to break resistance that failed, I can only assume these are short, these are short, these are short, these are short, these are short. So they're all entering and increasing position size every time we reach the point of control. So now I can expect that to be bearish, and the change of character would be a confirmed bearish uh, trend. Other than that, because the lower weekly, which is based on Friday price action, Friday option price, is very close. So if it does break, the reward is very, very slim. So if there is a break, I can expect this reversal over here, and really it would just be a manipulated move and a wick into more liquidity, stop hunt style into a reversal back up. So that's something that I keep in mind. That's why I'm tight here. And then if we do go tap the lower weekly, I will enter again. And now I have a much bigger reward from a probe that I believe could be a higher low into a higher high. Beside that, I look at the dollar because that's pressure on the market. So I'll look at the dollar in the morning. I can see there's a higher low. Dollar should continue rising. We have the trauma, 200 trauma. That's not really flat, but it's also right there, and it hasn't been touched in a while. Actually, since it's been at the bottom. So I could expect the dollar to reach 100.7 eventually, and that's going to be a lot of pressure on the market. So that's still in the back of my mind for a short. Other than that, that's all I look at. And then I get ready for the session. It's more of a, I don't try to overcomplicate it because the market is not complicated. It's a series of lower highs and higher lows leading into a breakout, higher high or lower low. It's that simple. It's nothing crazy. Everything is already priced in. Literally everything is priced in weeks ahead. The only thing that moves is the new orders that fluctuate the price of the previous expected move. That's it. It's just it. I don't use fair value gap. I don't use the I use equal highs, equal lows, breakage structure, market structure break, point of control, volume profile, liquidity, and traumas, moving average. That's it. I don't need anything else. Now, this is my handmade Mag 8 ETF, which has broken out after it swept the lows in April. And since then, it's been creating a series of higher lows and lower highs. At some point, it'll consolidate and break out. The same way it did here. It consolidated and it broke lows into a support, and then it just ramped since then. At some point, it's going to consolidate, manipulate, sweep, and then break out. Rinse and repeat. That's all it is. I have these that are DRAM is relatively brand new, like a couple months, not even. Um, that's the memory ETF, which is very important at this point because every investor is going to want to invest in memory stocks. Um, so that is something that you want to keep track of. And then I have the semiconductors ETF as well. When I see this kind of stuff, I can expect consolidation and then into a breakout, which is exactly what happened. What I can see here is that the moving average, the traumas are getting very tight. and it has crossed. The 20 has crossed the 50, which in technicality that is bearish. It's on its way to a bearish trend. So what I can see is a higher high, and at some point it's going to print a candle that's going to be something like this, something like this, something where it's going to tell me that the price has reached a resistance and that the resistance is going to it's going to hold. For now, obviously it's still trending. I'm not going to do much, but I can expect retest of 619 within a few days, and then it'll stabilize or consolidate again from that point on. But other than that, it's a waiting game.